Morning Doji star. Now it looks like this. A morning Doji star consists of 3 candles, as you can see. This pattern consists of a large red candlestick, the first, this black one, followed by a doji that is formed below the last candle, that is this plus sign. This is the doji candlestick. It is opened below the red candle. But the third green candlestick is formed the next day that closes well into the red candlestick and eats major portion of the red candlestick. So this green candle is the candle that tells you that a change is coming because it eats the red candle. Now if you're a short seller, you'll be happy once the red candle goes down, right? But once the green candle comes in, your profits will be reduced and you will reconsider your short selling position. And that's why this green candle is really important, because it makes the short seller or the sellers to reconsider their positions. And once they reconsider and they find that they are wrong, they start to buy, and therefore additional buying comes in. Now this pattern is considered as a major reversal signal, as morning doji star is more bullish than the regular morning star pattern. So this doji candle is really powerful, and the green candle that follows the doji candle makes it an explosive pattern, a pattern like no other. Now I will show you morning doji star on chart so that you can understand how to pick it up to your advantage. Morning doji star. Now it is simple. The first day it was a simple candle. 38.38 was open and it closed at 38. Okay, so it's nothing special in it. Let me bring it in between right here. This is nothing special candle. The next day it gap opens lower at 37.70 and closes near the open 37.63. Again, nothing special. The trend looks to be going down, but then it suddenly opens up or opens at the same rate. This should not be confused. This is a live trading example, so I cannot adjust it, but I just want to tell you the third candle, the third green candle, is either opening at the same open or opening gap up. So it doesn't matter if it opens gap up or at the same rate, but it does run up and eats or goes within this candle. It eats part of this candle and this doji star, and it closes up. Once it does that, that means a reversal pattern is here, and you can see it rose up from here 38 till here 43. That's $5, 14%. Huge. The point is, only this reversal pattern would have told you that a 10% gain is for you. And the point of understanding this pattern is, this green candle is not eating the open. It's just eating part of this red candle. But it's rise up is so roaring that usually it rises back up, because someone on the inside knows that the price or the stock is not that bad, and therefore he starts buying here, and he makes the price run up. So always look at this pattern. Once you find them, you will make easy money. So do look it out. It is a normal candle, red candle. The next day it opens lower, closes near the open, and then on the third day it just opens either at the same open or gap up and closes and eats part of this red candle. It doesn't eat its open, but it eats part of this candle. And once it does that, that's a bull run after that. Thank you.